So I was going through some of your funds, right? You manage 3 funds, the small cap, the mid cap, and you also look at the children's fund.
Yeah.
So the mid cap fund, I think, has been one of the longest in terms of time that you've managed the fund. And I was going through some of the returns. I think over a 5-year period, 3-year period, the mid cap fund has given over 30% returns to investors. Tell me a little bit about your investment style in that fund. For somebody who wants to replicate that for himself or herself in their own stock picking journey, how do you invest?
Sure. So I think first, everybody has to follow their own individual style. I don't think anybody should try and replicate anybody else's style. Each person has their own strengths and weaknesses, and you've got to play to your strengths and avoid those weaknesses. What has worked well for us is to have a diversified approach, which is why we own 60-70 companies in our portfolio. We've held that number of companies when we were 1,300 crores. We hold those number of companies when we are 80,000 crores. We focus on building the portfolio on a bottom-up basis. So this is not a macro bottom-up, top-down approach. This is not a sectoral approach. And we focus, like I said, on good quality companies and hold them for an extended period of time and buy them at sensible prices. Now, what does each of those statements mean? We hold for the long term, and you can see that in our average, our portfolio turnover is 20%, or even less, 17%. So we're holding companies for 5-7 years. We want to have an ROE on aggregate which is higher than the benchmark and preferably higher than peers. So we typically have a 16-17% ROE.
Okay.
So we're owning good quality companies. We're holding them for the long term. And I think that has worked well. And we want to pay reasonable prices, which means we want P multiples which are below average. So our fund targets to have a P below average, an ROE above average, and a holding period which is 5-7 years. And if you do that and you buy into adversity, I think that's the other thing, that whenever times get tough, either for the market or for individual companies, we will typically add to our holdings, not subtract from them. And I think that gives us a little bit, that having that contrarian approach helps a little bit.
So good quality companies with a P below average or an ROE above average. Can you give me some examples just to understand?
I mean, you can see that in our portfolio. I mean, today is hard to get PEs below long-term averages,
Yes.
certainly. But you can see that in our portfolio. I don't want to get into stock-specific names, but you see that across our portfolio.
So if you look at just your mid-cap fund, right, you are bullish on...
And sorry, I meant that on an aggregate basis, right?
Yeah.
So you have to look at from a portfolio, weighted average PEs, weighted average ROEs. So at a portfolio aggregate, you want to achieve that. So you'll have obviously some companies which are above average, some which are below average.
Correct.
But when you put it all together, that's what you try to achieve.